Hello and welcome to Startup Street. I'm Shruti Mishra and with me as always is Arundhati Ramanan. Here are the top headlines on this evening. Zomato is adjusted EBITDA positive in Q4 FY23, says CEO Deepinder Goyal. Company narrowed its consolidated net loss to 188 crore rupees from 360 crore rupees a year ago. Goyal claims to turn the entire business, including Blinkit, profitable within the next 4 quarters.
Swiggy's food delivery business turns profitable in 9 years since its inception. This is after factoring in all corporate costs, excluding employee stock option costs. Meanwhile, Instamart is on track to hit contribution neutrality in the next few weeks.
Byju's refutes creditors' claims of hiding $500 million via its US-based subsidiary Byju's Alpha. The company says that the transfer was within its rights as outlined in the Term Loan B agreement, which was intended for driving growth in its global operations.
Data startup Fivetran has received $125 million debt financing from Vista Credit Partners to accelerate enterprise growth, global go-to-market strategy, and platform innovation. Venture debt deals is increasing amid a funding winter, with startups raising funds via the venture debt route having increased 3 times from 2019 to 2022.
Battlegrounds Mobile India is back after Krafton gets a conditional nod after a year-long ban. MeToo Minister Rajiv Chandrasekhar said in a tweet on that the approval of BGMI comes after the game complied with issues of server locations and data security, among others.
Twitter has alleged that Microsoft violated an agreement over using the social media company's data. According to a letter seen by Reuters, Elon Musk's lawyer leveled accusations of unauthorized usage of Twitter's data by Microsoft, including sharing data with government agencies without permission in some cases. Those were the headlines that we're tracking for you this evening. But on What's Brewing today, Zomato closed over 1.5% higher after the food aggregator narrowed its consolidated loss by 48% yearly in the fourth quarter. Now, the company said its business, excluding quick commerce, turned adjusted EBITDA positive in the March quarter, driven by the food delivery business. Shilpa Ranipeta joins us now with the key details of the numbers. Shilpa, take us through the highlights.
Well, let me first run you through the headline numbers. Now, for Zomato, as a company, revenue from operations for the quarter grew about 70% year-on-year to 2,056 crores, while its consolidated loss narrowed by nearly 48% to about 187.6 crore. But the highlight, especially according to the company, is that ex-Blinkit, the company has turned adjusted EBITDA positive at 28 crore rupees. Now, CEO Deepinder Goyal has said that they aim to make the entire business, that includes Blinkit, the quick commerce, profitable in the next 4 quarters, and this also at a PAT level. Now, food delivery business was adjusted EBITDA positive for the 3rd quarter in a row at about 78 crore rupees. However, there was still a slowdown in growth for food delivery, but the company said that it is seeing green shoots since February and says that the growth should reflect in better gross order value next quarter. Now, for this quarter, however, the GOV was down about 1% quarter on quarter, and the average monthly transacting customers were also down about 16.6 million in the fourth quarter, as against 17.4 million in the last quarter in Q3. Now, Zomato has attributed this slowdown mainly to the shutting down of the bottom 225 odd cities. Now, the company also commented, in fact, on ONDC, where it said that it is watching the progress of ONDC closely and will learn from it. Now, speaking of Blinkit, the average order value there also saw a reduction. In fact, it was the lowest this quarter in this entire year at about 522 rupees. Now, to this, Blinkit founder Albinder Dinsa said that they've learned that this AOV in this business will continue to swing up and down in the near to midterm, in fact, and this is mainly due to several factors, including seasonal factors. But the company hopes to be able to predict such swings better and mitigate its impact on its margins. Back to you.
All right, Shilpa, many thanks for those details. Meanwhile, Zomato's rival Swiggy has declared that its food delivery business turned profitable in the March quarter of FY23 after factoring in all corporate costs, excluding employee stock option. Now, the company's quick commerce segment, Instamart, is on track to hit contribution neutrality in the next few weeks.
All right, from food tech, let's shift focus to edtech. Byju's lenders have accused Byju's Alpha non-operative entity with no employees set up to receive the term loan B of hiding $500 million as part of a fight between creditors and the edtech major. Now, Byju's Alpha faces a lawsuit over who should control the company in a Delaware court. Lenders claim that because of a default earlier this year, they have the right to put their representative, Timothy Arpole, in charge. When we reached out to Byju's, the company said, and I quote, "The litigants have made bewildering claims that Byju's moved $500 million from Byju's Alpha, insinuating that these acts were somehow wrongful. This is entirely incorrect." End of quote. As I mentioned earlier, Byju's Alpha is a non-operative entity, and Byju says that it entered into the Term Loan B agreement with the clear intention of utilizing the raised funds to drive growth and expansion in its global operations, and is free to transfer and use the funds as necessary. The company also claims it has fulfilled all its contractual payment obligations as agreed upon in the Term Loan B signed into 2021 and has not missed a single payment thereunder. Now, remember, according to multiple media reports, Byju's has been trying to renegotiate the terms of the loan, which was taken out by Byju's in November 2021. The EdTech major is yet to file its financials for FY22. We also know that Byju's has been trying to raise funds to the tune of $200 to $500 million to repay its $1.2 billion term loan and control costs. This also comes on the backdrop of the Enforcement Directorate surveys last month at Byju's, which were part of a probe into FEMA violation. Now, moving on to the gaming sector, gaming and esports content platform Rooter has raised $16 million in a growth round led by Lightbox. The round, which was a combination of debt and equity, also saw new and existing investors participate. The company aims to cross $10 million ARR by the third quarter this year and claims it is on the path to hitting profitability on or before April 2024. To elaborate on the road ahead at Rooters, joining me now is its founder and CEO, Piyush Kumar. Piyush, welcome to Startup Street. First up, can you tell us, of the $16 million raised, how much is debt and how much is equity? And also, if you could take us through the fund allocation plans, any new offerings in the pipeline, how does the fundraise boost market expansion?
Thank you so much. It's a pleasure to be here. Yeah, it's a very exciting time. So the fund that we have raised so far, 80% of the fund that we have raised is through equity and 20% is through debt. And it's a healthy mix given the fact that we are the only streaming platform in the country which is making revenue. So on the basis of our revenue growth, which is about 4x in the last 4 quarters, we were able to also secure a debt raise in this particular round. This round primarily is to help us continue with our growth. We are growing very fast. We have already crossed 50 million downloads on Google Play Store and are adding almost 3 to 4 million users every month on our platform. So our clear objective is to continue growing our revenue. We would be crossing, we are at 7 million ARR right now. We would be crossing 10 million ARR in the next 2 to 3 months. But most importantly, we plan to be a profitable company on or before April 24, given the fact that our burn is under control and our revenues are growing. So the clear plan of the round is to continue investing in technology. We have really invested a lot on streaming technology to ensure most of the mobile gamers are able to stream using Rooter, and we have more than 1 million creators every month to substantiate that particular effort that has been done in the last 3 months. The second investment is to also grow our user revenue. Our user revenue is between 5 to 10% right now, and we are doing multiple activities and launching multiple features to let users spend money on Rooter, which should start contributing almost 20% of our revenue in the next 4 to 5 quarters.
Okay.
And we'll also look at SPU expansion.
Okay. Also, Piyush, I believe you're looking at potential strategic acquisitions. What verticals excite you, and how soon will we hear of an acquisition?
Well, we are talking to quite a few companies. The key idea here is that we want to partner with companies which are growth-centric, which are revenue-centric, to be honest. And we believe that the time has come in the gaming sector to unlock different monetization opportunities. So our partners would necessarily be companies which are looking at monetization at this stage. And it would range from publishing to esports tournament organizers to different technologies that can help us serve our content better. So we haven't really zeroed down to a particular sector, but we're talking to many companies in this regard.
All right. Now, Router's revenue grew 4x in the last year, and like you mentioned earlier, to $7 million ARR with a gross margin of 80%. What has led to this bullish growth, A? And B, you're also looking to cross $10 million ARR by the third quarter this year, like you said. Where do you see the next leg of growth coming from?
So for us, one of the bigger opportunities we see in this market is that most of the brands, whether endemic or non-endemic brands, are looking to engage with gamers at this stage. The quality of audience which gamers possess is actually much, much better than many other sectors which are around us. And to tune to that, we have seen an amazing amount of acceptance within brands ranging from Mountain Dew, Airtel, Intel, McDonald's. We have actually worked with a number of brands across categories. So that is one thing which is fueling our revenue growth. Okay. Second is the fact that we are also, unlocking many opportunities on user revenue. So there is a Router store where we are selling gaming currencies. That is also helping us expand our revenue right now.
Okay. Like you said, Piyush, you're also aiming to achieve profitability on or before April 2024. So give us a sense of your revenue mix, your best performing verticals and top markets.
For us, the market for revenue right now is India. So while we are also present in Bangladesh and Nepal, but India is the one that supports the revenue. From the brand monetization vehicle, advertising and performance marketing, serves the best revenue in terms of even the gross margin. Both put together is about 85%. And third is the fact that for us to be on the path of profitability, we are focusing both on top line and bottom line. And we believe that as we scale and inch towards a 20 million ARR, by third or fourth quarter of next year, the most important aspect will be how we build user revenue. So a lot of effort of the team is actually going on cracking marketplaces and different avenues for user revenue.
Okay. Router is focused on India's growing creator ecosystem, and you are working with top esports teams, gaming content creators. So tell me how your business model is unique and how you plan to further grow the content categories in the country.
So for us, from day one, our thesis was that if India has to become a gaming market, a gaming creator market, you need to have 3 to 5 million monthly creators, exactly the way Twitch functions, which has about 7 to 8 million monthly creators. So what we've done is we are the only platform that gives streaming tools on the app, and that allows anybody and everybody to either become a streamer or to create gaming reels or to create IRL content. So technology playing a big role is number one. Number two, given the fact that every user can become a creator, we have a huge number of people who are taking up this as a career. There are a lot of stories about routers, creators, like a 45-year-old and a lady who's a streamer and is actually doing very well. A 7-year-old streamer who's doing very well. So a range of people who are actually relying on Router. And at this stage, I'm happy to confirm that 20,000 creators currently are making money through Router every month. And we plan to take it up quite well. So focusing on creator ecosystem is the only way to fix the supply of content, because demand is very, very big in market.
All right. Also, your vision is to become the world's largest mobile game streaming platform on the lines of what Twitch has built for the PC and console gaming space. So how do you view the competitive landscape globally, and how do you plan to take on the big boys? Also talk about your cross-border opportunities.
So for us, we believe that we are very inspired by Twitch. It's a great way, 13-year-old company. The way they have expanded and they have set up a base on PC and console gaming is very exciting. If you look at the top 10 games on Twitch, all of them are either PC or console games. So we see that the new age of gaming or newer markets of gaming are going to be driven by mobile gaming. And anybody who creates a strong creator ecosystem and a great content opportunity in that particular market would be able to not just focus on the home market for us, that is India, but many markets like Southeast Asia, MENA region, South America, Africa. All these markets are the markets which will grow now in this decade, and they'll be fueled by mobile gaming. So for us, technology is already in place and we are improving it each and every day. We believe that as we build creator ecosystem in different markets, look at demand on how many gamers can come and download the app, most importantly, even monetization, it's a great opportunity. So we are looking at Router's journey from an 8 to 10 years horizon from now.
All right. We wish you the very best, Piyush, for all your growth and expansion plans. It was an absolute pleasure talking to you. Many thanks for joining us on Startup Street.
Thank you so much. Thank you so much.
On that note, it is time for us to slip into a short break. But coming up next, Agraga has raised 70 crore rupees in the Series A round. We put the co-founder, Venkatesh Narayanaswamy, on the hot seat to find out how the company plans to use these funds. Stay tuned.
It's okay for us to nod for everything. Because we are parrots. Yes. But your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Samsung Solve for Tomorrow is a national education and innovation competition. This is your chance to make an impact for India. Don't miss the opportunity to win prizes. So join the Samsung Solve for Tomorrow today.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything! Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
The recent breakthrough in AI has put India at the cusp of revolutionizing the lending process for underserved MSMEs. To leverage this opportunity, experts of YouGrow, India's leading MSME lender, have curated informative content on the potential that banks and emerging tech lenders have unleashed by leveraging AI and ML to create lending processes that are ESG compliant and seamless borrowing experiences for MSMEs. YouGrow Capital, empowering the MSME ecosystem.
I'm a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know. You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Welcome back to Startup Street. Agraga has raised 70 crore rupees in a Series A round from Ivy Cap Ventures. Now, the digital logistics platform plans to use these funds to expand operations across India, among other things. Now, Agraga provides a seamless digital experience from booking, tracking and execution in the logistics space. Now, today on the hot seat, I'm joined by the co-founder, Venkatesh Narayanaswamy. Venkatesh, thank you so much for joining us on Startup Street. Like I said, you're a digitally integrated cross-border logistics platform. How are you using tech to make the process seamless? What are the pain points that you're solving for your clients?
First of all, thanks, Arundhati, for having me on the show. One of the key factors that has happened over the years is that our cross-border trade has had very limited adoption of technology. So there has not been too much experience that has been delivered to consumers, primarily the exporters and importers in this country. And with the government of India focusing on expanding exports and one of the key drivers being exports in India, we feel that technology will play a huge role in making sure that the Indian MSMEs and enterprises become extremely competitive. The main aspects of this is that there will be a key factor the technology will drive in making sure that the entire process becomes seamless. Be connecting direct asset holders across the board, whether it's a transporter or shipping line, or eventually in another country and the geography, multiple people. So the access to capacity becomes seamless through technology.
All right.
Second is the ability for customers to have a seamless view of where their shipments are at every single point of time across the entire supply chain.
Right.
These are critical factors that actually make sure that they have a seamless experience.
So you're using tech to make the entire experience absolutely seamless. So talk to us about what you have on offer. Do you have anything new in the pipeline, and what differentiates you from other players in the space?
So one of the key factors that differentiate us from other players in the market, one, this entire space itself is extremely nascent. But apart from that, what brings us and sets us apart is we not only provide a technology solution to the players in the market, the exporters and importers, we also build in a reliable on-ground solution. The ability to combine these two of providing an on-ground solution with a seamless digital experience is what ensures that we are ahead of the game at every particular point of time. And the second important aspect is how we are able to constantly give them direct access to capacity that is asset owner integrated. We are delayering the supply chain to have very, very minimal intermediaries in the system. So technology takes away the intermediary chain and brings them direct access to owners of capacity, which is either rail, road, or the cross-border facility.
Right. So you're delayering the entire process at this point, and to reduce the number of intermediaries. You've raised 70 crore rupees and you'll use the funds essentially to expand operations and augment your tech stack. So talk to us about your fund allocation plan. What's top priority?
So the three key top priorities that we currently have today is that, one, we expected to move into 15 cities from the current 3 cities that we operate in. We will be moving into the primary markets of northwest of India and the eastern part of India. We currently present in the southern cities. That's one key area. The second is being able to provide seamless integration across multiple stakeholders in this game. Technology will be a very, very important factor where we are able to integrate and give direct access across the board to our customers through this integration process. Ivy has come in, given us the support to be able to expand forth on this. And the last and the most important thing is that to actually make sure that we take the platform and get customers to adopt. Like I said, it's a very nascent stage in the industry. And I think making sure that customers are having a visible area on the platform is a key thing that's going to play a big differentiator.
Right. Talk to us about your revenues then. You only launched at the end of 2021. So what are the revenues you're clocking currently and what are the targets that you've set for yourself going forward?
So we've bootstrapped our way for the last 12 months to 14 months. We've been able to gain a strong foothold in the market. We're currently serving at least 200 plus customers, both in the enterprise and the MSME segment. We have over 500 supply side partners that are on the platform at that particular point of time. We also have a significant presence of offering services in 30 plus countries. We intend to, with the support that has come in terms of funds by this round that we've raised 70 crores led by Ivy Capital, we intend to be able to significantly increase our growth at least by 5x over the next 1 year. The next 12 months.
Right.
So we intend to hit at least a 30 million to 35 million ARR by the end of 2024.
All right.
Year.
So grow about 5 times is what you plan to do. Now, like you mentioned, you're currently present only in 3 cities and those are the southern cities. And you hope to expand to 15 of them going forward. So talk to us about the timelines. Where are you seeing most of your demand and which cities do you plan to expand into? Any international expansion on the cards as well?
So in the short term, the first 12 months, I think the key markets, everybody is fairly aware that the northwestern markets, the Gujarat and the Maharashtra belt caters to, and the North India belt that caters, is being catered via the Mundra ports, Mundra and Nhava Sheva ports is extremely important to have a presence in. So we would be growing across the western regions in Maharashtra, Gujarat, the northern regions in Rajasthan, Delhi, the NCR region, and Punjab. Those are the key markets that we wish to expand to, apart from the eastern port in Calcutta. International expansion, yes, we intend to be in the second year moving into the Indian subcontinent and the Middle East segments, further moving past into Southeast Asia and the Chinese markets and setting up operations over there. But in the initial year, we also believe that there will be sales efforts that we will start working on in the North American and the European markets.
All right, so big plans there on the expansion front. All right, Venkatesh, we're completely out of time and we wish you all the best going forward. But it is Friday, and Shruti, you have some information on the deal tracker for us today.
Absolutely, Arundhati. Like you said, it is Friday and it's time to take stock of all the deals that took place in the startup world. This week saw a total of 13 deals valued at $140 million. This according to Venture Intelligence. Here are some of the notable ones. Agilita Sports got $54.61 million from Convergent Finance. Cost 5 Intelligence raised $28 million from 361 Asset Management. And online gaming startup Router bagged $16 million from Lightbox, Trifecta Capital, Pivot Ventures and others.
And that's not all. Men's premium innerwear brand XYXX got $13.34 million from Sauce VC, Anicut Capital, DSG Consumer Partners and others, while digital logistics player Agraga raised $8.51 million from Ivy Cap Ventures and Ulterior Capital. According to Venture Intelligence, this year has seen a total of 224 deals valued at over $2,800 million. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.